There we go. Okay,
All
I think
right,
we're live.
cool. Up and running.
Excellent.
Yeah, I can see you. You can see me.
Yeah,
Everyone can hear
everyone can
everyone.
see two of me because I'm in your corner also.
That's true. And
Hey everybody,
technically,
welcome to show 69 of Houston We Have a Problem with my special guest, the Gherkin from Pickle Financial, and yeah, it's special. Oh, let me see if I can actually get the one sec. This is what they actually love, and boom. No, it didn't go. Boom. Ah, no, go. There it is. All right.
hi everybody over on Houston Stream. How you guys doing? As you know, I'm Pi-Fi, and me and Houston have collabed before, and we're going to kind of cover some of my futures theory. Do you want me to just jump right into it? You want to talk about the Adam Aaron thing first? You seem to
Um,
be interested in that.
well, yeah, we'll do a little news recap here. So, big news today is it was revealed Adam Aaron sold what $50 million in shares today. He's still saying, "Oh, I've still got 2 million,
53?
53 million, something like that,"
Yeah.
and he's telling everybody like, "Hey, don't worry, I still have 2 million shares. I only get paid in stock. I want to diversify, but I'm pretty sure he's already a billionaire. So why does he need to diversify?" Uh, but it's one of those things that my biggest trepidation with AMC is that Adam Aaron and the board are old school bros from business school days, and that they are buddies with everybody who's evil, and they're going to care more about those guys first than they do about you. And that's always been my little trepidation with being super gung ho about AMC. Is that they don't do things with you in mind. They do things with them in mind. Um,
Yeah.
and that's always been my trepidation. So he sold off a bunch last week. A bunch of the board sold 250,000 shares or something. Um, they're I don't think they see the same things that a lot of other people see in AMC, and I do think it can still be a squeeze potential, but they don't have the same kind of board that GameStop does, where they're out for blood. And everything they do seems to be like, how can we stick it to these guys in the most heinous, checkmate way possible? And they're constantly coming up with plans and schemes and just working these things through. Uh, it's I think it's the big difference between the two, and that's why GME is the sun and AMC might be a planet orbiting the sun at this point. And then the other news, what's the other thing I was going to talk about? Oh, Elon, his brother dumped $100 million in shares the day before Elon crashed the stock price by pondering about selling 10% of his stock. And these are the things. These are the reasons why he was like the SEC removed him as a chair or no, as CEO, because he does these little manipulative things that you can get in trouble for. Um, but then we had the Ryan Cohen tweet that was basically like a middle finger to that whole thing. Like, what should I do? Hold or hold, basically.
Yeah.
Uh, so, yeah, those are two big news things I want to talk off out the bat. But we got the Gurk here, and the reason why I want to bring him on was his futures theory and the options, or I forgot the name of it again, the options thing.
Yeah,
Um,
I'll go into it
yeah.
all.
So take it away, my man.
Okay. Well, I guess I could address the Adam Aaron thing. I mean, from our last collaboration that like I'm not a big fan of AMC. I think I described it earlier as, on one side you see Ryan Cohen doing the right thing, moving forward with the company, keeping his mouth shut, growing earnings, and just progressing the company from a fundamental standpoint. And on Adam Aaron's side, you kind of see a CEO doing something very similar to what they did with Sears, kind of dismantling and tearing apart the company. And it's starting to feel now like he's telling people to diamond hand his stock while he's selling out, and I feel like he's just pillaging his shareholders at this point. I felt that way with the share offerings, and now that he's personally gaining on it, it looks even worse, and it's going to look bad to the market as well. Sentiment's going to keep the price of that stock afloat as long as people are holding it. The price will stay up, which I'll get into maybe a little later and how and why I think that's the case, and how, like, Citadel's long GameStop or AMC, right? And so that creates an interesting caveat, and we'll get into that as we get into this ETF and these futures things. But I've never liked AMC. We've had this discussion in the past before. Elon, I mean, he's a great front man, right? But maybe not the best chairman or CEO in the world. Some of his business decisions, are not the best. And
Yeah.
but it people like to buy his stock, and then that leads to institutions buying the stock because they don't want to miss out on the potential. But when Tesla sells off, I mean, Burry, as always, was early, but maybe not necessarily wrong. I find that if you get into Burry's plays about 2 years after he does, you might make some money.
Yeah.
But yeah, we can jump into my futures thesis that I've been working on with me and several of the people that I call like my quants, and I kind of just farmed my audience for people with backgrounds in finance and programming, engineering, mathematics. And we built like a small group, and we've been plugging away at this for months now, back since June. And this is kind of where we've landed. So one of my users actually made an indicator for TradingView, so anybody can pull this up at home and kind of see the basic outline of it. There's a little more that I'm going to have to add as we go through this, but essentially what we noticed back in June is that there were these points where GameStop increased in volume and volatility. Sorry, one sec. Just get this lined up so we can see it. All right. So we noticed that there were these windows where GameStop was increasing in volume and volatility. And we noticed that these were overlapping ETF or overlapping FTD dates from the failure reporting dates, right? And we were calling these golden biscuits at the time. We didn't really know what they were. We didn't know if they occurred every cycle or every other cycle, but there seemed to be this overlap in these FTD dates.
Yeah, you can just see the sequence, how it just repeats the same pattern but smaller and smaller. Yeah,
you can. And this is where we first landed, and we're like, we're going to play some options and see how this pans out. And I think that was right around this time frame, right? So we got burned. Because we approached these FTD dates and we totally expected the stock to run.
Is that what's the date on? Is that July?
Yeah, that's July, August.
August, okay.
Yeah, and so there was a small run, right, which indicated that there was something there, but we weren't really figuring out what. And then we had all the ETF rebalances going on through this period in GameStop's share offering. So millions of GameStop shares were made available to the market, especially during this period in July and August, which we'll get into how that affected the August cycle later. But so we went back to the drawing board and we started looking at futures because we noticed that there was this significant downturn in the stock price immediately after earnings every time, right? Yeah. And earnings were good. There was no reason for that. And there was no reason for that continued downtrend after earnings. And we kind of landed on these future rollover dates, which occur here in these orange lines. And they go all the way back. There's action that goes, back the last 5 quarters on this. At some of it you can't see. Hold on, let me move your face and head so we can see more of this. There we go. And so we had these futures rollover dates, and it seemed to be that like after the futures rollover date, and we weren't looking this far back at the time. We were just looking at March and June, right? Because like January was this anomaly to us at the time. We didn't really understand. And, we immediately after the rollover date, all of a sudden they can short the stock back down. So it runs up into the rollover. and then immediately after the stock comes down. And so we figured they're rolling these futures contracts. So we started looking here in September for the rollover date here. And we started looking into what started these rollovers. And we realized that on these dates, these yellow bars, we had, well, this is where it gets tricky. Right here, you have the third Friday of that month every time.
Yeah, it's big options day, third Friday, right?
Yeah, big options day for monthlies.
Yeah.
But what's interesting is if you pull up the CBOE options expiration calendar, you also have quarterly ETF options that fail on these dates or expire on these dates. And I'm sorry, I'm not super prepared for this.
It's okay.
So the presentation's a little lacking, but we'll get to the point. Anyway, so we have these ETF options expirations, and this is the moment, these dates, these yellow bars indicate the moment at which GameStop monthlies and ETF quarterlies expire. Now, within T+2 to 3 of that date, GameStop runs massively, and that's what kicks off every one of these cycles. It's happened every single time going back to Ryan Cohen's buy-in. February 25th, May 25th, August 24th, soon to be on November 24th. And then also back before January, we see this effect kick off this cycle that leads into these future rollover dates. And at first we thought it was just the futures roll, but then we noticed there was we had these, this moment at the beginning, and that's how we kind of found these ETF dates. And so, we went into this last cycle, which is right here, fully prepared, just loaded up with options, ready for this 24th date. It played out perfectly. And then, we rolled all those options up and out so we could play the roll, and they didn't roll, right? So we all made a shitload of money and then immediately lost it all. And it was interesting though. And that got me thinking, how can they fail to roll the futures contract, right? Because if they've taken that original short position in GameStop that Melvin built up from 2014, and they've packed it into these futures contracts and hidden these shorts, and those rolls represent their exposure to that short position, right? How can they fail? And what happens if they fail? And have they failed before? So I started digging back, and I was thinking maybe January wasn't the anomaly that we thought it was. Maybe January wasn't, this just random burst of retail interest. Maybe there was more to that, more market mechanics behind that run. And so I started looking into, everything that happened in January, and you start to see something really interesting if you think about it, at least the way I did, and that you see, illegality and all, like these hedge funds and stuff, they're risk adverse. Yeah. And doing illegal things is risky. And, they will fudge the law, and they'll absolutely exploit any available loophole. But doing something blatantly illegal, like what Robinhood did in January, that's like an emergency measure, right? That's when there's no other option left on the table. They'll resort to that. And that got me thinking, like, we knew Melvin was shorting from 2014, but how were Citadel and Point 72 and Susquehanna and all these other big players involved also, right? Like they shouldn't be. Like Melvin's a short hedge fund, they short things, but like these other guys are market makers, and Susquehanna is huge. So why are they involved? And we started digging into the ETFs, and GameStop has an unusual amount of ETF exposure.
Oh, for such a small company, it's crazy.
For such a small company, not only that, and like a retail company, right? But it's actually, I think it was in like 93 different ETFs back in January. 113. It was ridiculous.
That's a huge number for what just such a small float.
Yeah,
Yeah.
and so if you start to think about like why these people ended up in these plays, you start to like realize that it's more likely that Citadel and Susquehanna and Point 72 weren't really short GameStop, right? What they were is more likely short ETFs. Because these guys want a big, broad basket. They want to short the entire, the entire sector.
Yeah.
They don't want to short GameStop, right? And after the COVID crash, what looked like it was dying?
Yeah,
retail.
Yeah,
and if you go into any mall in America, and I said this before, and just chuck a rock, you're likely to hit something that these guys are short. And I can kind of show you an example of that here. So if we take, let's just do it like a simple line graph on GameStop, and we look at like AMC. Well, hold on. Let me price match this so it looks a little better. Nope. Same percent scale. That's not lighting up very well.
I'm contagious.
You know what? Actually, I think it is. Yeah. Here we go. And then we take, I don't know why those are scaled differently. Oh, there we go. So let's take AMC. Let's look at Bed Bath & Beyond. What's Nordstrom's?
Nord? What is Nordstrom's? I'm a Northwest
JWN.
guy. I know like actual Nordstroms. They live in my community. Should know what their thing is.
JWN. Let's see what else. Macy's. And we look at GameStop in relation to these other stocks, and you can start to see that they're all kind of scaled, like they're all following the same price pattern.
Yeah.
Here, let's see. Put it in log. Maybe that'll help. No. I don't know why it's adjusting one and not the others.
I'm contagious.
If you look, they all follow the same spike pattern that GameStop follows. Yeah. They're not lining up the way. Oh, there we go. If you reduce, for their various price points and such, but these things are all in the same ETFs together.
Yeah.
Right. So you have these big short hedge funds, or these big market makers and larger like investment banks and stuff like that. And they're short the ETFs. And you have Melvin in here trying to, short GameStop into the ground. And sometime in January, I think they realized each other's position. And that's when Citadel bailed Melvin out, because they realized that Melvin getting margin called would present exposure on their position.
Oh yeah.
And force them into a margin call.
Melvin got ballsy, and they stopped doing these ETFs and equity swaps, and they just went straight up and were borrowing the shares at hundreds of %. So yeah, and they just figure like, this thing's done. We can do whatever we want. We can get these shares any way we want to short, and they started like abandoning the safer method of hiding their shorts in these swaps.
And so we figured, that if we looked back before January, maybe we would find some of what was going on after, the November future cycle had obviously failed.
Yeah.
And we started to look into this zone right here after Ryan Cohen's buy-in. And
Yeah.
this is when you first start to see like this future cycle get pronounced. And if you look back then, those futures didn't roll either, right? Like
Yeah.
we ran up on the ETF exposure a little bit, and then no volume or price increase through the expiration. And this happens twice. This happens both in last September and last December. And but we do notice this happen.
Yeah.
And this like little anomaly of price action. And then we go back to those golden biscuits, right, that we found. And we realize that this price action is occurring within T35 of these futures dates. So when they fail to roll the futures, they create an FTD pileup.
Yeah.
Essentially, because all of a sudden now all of those shorts are due to the lender.
Yeah.
Now, I'm not sure if they actually cover those FTDs or if they just pack them into new futures contracts and move them forward. But either way, it generates a lot of price action. And out here in January, you know, on those failure dates, we see the price improve significantly.
Yeah.
Right? Like
so combined with the FOMO, I guess. And
yeah, we have a massive price increase here and here. And we have a lot of gamma exposure, right?
tons. Yeah.
And so, you know, we started to get into this cycle and we start to see that same FTD exposure play out within 35 days of our most recent run. And so we were looking at the 13th, the 21st, and the 26th for FTD spikes. And right now we only have the data up until the 13th, but we see a spike in GME FTDs on that date. But what's really interesting is here in T+2 of the futures expiration is we see 10 million FTDs in GameStop containing ETFs, which is higher than it's ever been.
Yeah.
Not only this year, but last year as well. And within T+6 of our last expected fail date. And so market active participants for failures, active or authorized participants. And those are the guys who like market, make, and ETF.
Yeah.
They have T+6 to settle, as opposed to market makers and short hedge funds who have T+2. So their failure dates actually run in a slightly different pattern. And we weren't tracking this because ETF FTDs were very low.
Yeah.
Right. And so T+6 from that failure date on the 26th that we expect for GME, what happens? We run up to $250.
Yeah.
Like right on schedule. And so, let me, I guess, present what this means for what's coming
in the year 2000. Look into the future.
Yeah. And try to just explain this all. So we know with a fair degree of certainty that when ETF quarterlies and GME monthlies expire on October 19th, this pen is awful. Hold on. I need like a smaller. So we have ETF quarterlies and GME monthlies here expiring on November 19th. In T+2 from that date and T+3 from that date, there will be a massive amount of gamma exposure placed on the short hedge funds for any contracts that were in the money or put in the money from the last quarter. So anything from this low to this high, they will have exposure from that, right? And so they have to cover. There's no option for gamma exposure. They have to cover it, because if they don't cover their gamma exposure, it blows up their margin at 100 times the rate. So we expect GameStop to run on the week of the 23rd and 24th.
And then week?
Yes.
So that gives them a real short window.
Very short window to cover. Yeah. But the exposure will be there regardless. Then we enter a period that's sort of unknown immediately after that, where we approach the roll date. So
Yeah.
this is futures roll date. And we will either volume and price will increase into that date, indicating a roll,
Yep.
or we will trade flat into that date, indicating a failure to roll. If they fail to roll, here's where it gets interesting.
Then you get T35 after that, right? If they fail to roll.
We do.
Yeah.
Well, no, not T35. Something different happens in January that doesn't happen at any other time of the year. On December 19th, ETF leaps expire. Okay. So this price action that drives us every quarter, this ETF quarterly expiration and GME monthly expiration that occurs. Well, here on December 19th, ETF leaps expire.
Explain what those leaps are, because I don't even know.
So leaps are leaps are the farthest dated contract.
Okay.
It's essentially a contract like on GameStop right now. You can buy leaps for January 2023, January 2024. Those are leaps.
Okay.
They tend to have the highest open interest and most exposure because the contract is held for so long.
Yeah.
And this also happened last January, because only during this quarter do ETF leaps expire. And not only do they expire once, they expire again here on January 22nd.
Okay.
Or 23rd. I think it's the 23rd. Hold on, let me double check the calendar.
I can look at my options that I'm getting hosed on for that date.
January 21st.
Yeah, 21st. Yep.
Yeah. So this thing that drives our price action every quarter is ETF quarterlies. But in January's cycle, we have these two unique dates that only happen once a year. And here on January 1st, we have ETF and GME leaps expiring. And I think this is largely responsible for the price action we saw last January. And the fact that we have not one, not two, but three of these hard run-up dates, right? And that's in addition to whatever happens with the futures contracts.
Yeah.
And then I kind of, we were discussing like, well, you know, how do we guarantee as a community, or how do we help this, you know, massive amount of exposure to these market makers, ETFs, and short hedge funds that all occurs within this window? Like, what can we do? And what did we do last year to facilitate that squeeze? And we started looking into like the SEC report that Gensler released. And, you know, they very clearly state that it was not a gamma squeeze. It was not a short squeeze.
Yeah.
And so what did squeeze? Well, hedging, right? And they were hedging options. The volatility squoze. And so, you know, I'll link you to a DD later that kind of discusses how these guys are short volatility. And it's very complicated to explain, but I think the DD explains it really well. But essentially they have to hedge, right? They have to hedge. And this is what explains all those like 50-cent puts, because these are all part of their volatility basket that they use to, you know, remain short or long volatility. And these baskets, you know, return a profit, but they have to constantly hedge them as volatility goes up or down. And by, you know, volatility going up massively, then they have to hedge ahead, raising the price with their own options to hedge these volatility baskets that they have. And they use swaps to do this. They're called variance swaps. So essentially, by retail just FOMOing into GameStop last January and creating all this options exposure,
Yeah.
they accelerated this exposure on the market makers and the short hedge funds and these ETFs, because they then have to hedge all of these retail options as well,
They're
right? To
basically
keep their
hedging a
positions.
hedge. Yeah.
Yeah, they have to hedge their hedges.
Just hedges all
right?
the way down. Yeah.
and this January, we find ourselves in a really unique position. They also have to use stock to hedge,
Yeah.
right? GameStop's illiquid. The float is owned. A chunk of it's getting DRS'd,
Yep.
right? And what we're seeing is we're approaching this point, but there's no shares to hedge with, right? So they have to hedge with options, or they have to create synthetics to hedge.
Yep.
And the only way to create synthetics is by creating more exposure that they then have to hedge, right?
Yeah.
Because
Just
they have
digging
that,
holes. Yeah.
yeah. For every reaction, there's an equal and opposite, or for every action, there's an equal and opposite reaction, right? So if they short the stock using synthetics, they then have to buy back, and the stock just finds the same level.
Yep.
The same thing is true here. If they're trying to generate volume with synthetics, it's not possible. So they need shares. And since there's no shares available, what it can create is this situation where they are unable to obtain anything to hedge with, and their position runs out of control. And I think this moment between November 24th and January 25th presents this window where they have the absolute most exposure that they have throughout the entire year. All the data points that we have here are, backed by historical data time and time and time again. I mean, I guess for the ETF leaps, we only have the last January, but that's a pretty significant data point, right? And what's interesting is that retail's broke, right? So retail buys.
Yeah,
it's true. Down. We are like we don't have.
Out. I'm tapped out. I mean,
everyone's tapped out.
Yeah,
like we don't have the money to buy far dated option calls in large quantities, and that presented something really interesting about the January and March run up. If you look at the day they peak, it falls on a Friday.
Yeah, payday, baby.
Yep. Well, not just payday. It's not the payday. What it is it's an options expiration day for weeklies, and everyone sells their options, releasing them of their gamma hedging or delta hedging requirements, right, and leaving them with no exposure on the following day. So basically, when GME ran in January, everyone sold their options here because they were going to expire. And then as soon as they didn't have to hedge that anymore, the price came down. Same thing here in March. As you know, the rollover date is a Friday. Everyone sold, price comes down. Same thing here. Everyone sold, price comes down. So by buying options slightly further out, when this last ETF leap and GME leap date hits, and the price is going to go up, like the price should be way up by the time we get to this point. But when this date hits, if everyone's holding options that are further out, we've been discussing February 18th because it's the next monthly date that gives you exposure for the whole window. And what that means, when they hit this date, whatever the price may be, they then have to hedge whatever contracts are out here as well. And if those are as significant as they were last January, that hedging their volatility is going to cause a ton of gamma exposure. That gamma exposure is going to lead to a gamma squeeze. If that gamma squeeze fires, then it puts the short positions at significant risk, causing a short squeeze. So it kind of, all three of them stack up to present this opportunity for retail to not only just make a lot of money on options, if they choose and they have experience doing this, but also an opportunity to squeeze the hedge funds that they so desire to squeeze.
Huh.
Any questions? I know it's a lot.
Yeah, yeah.
That's the short and sweet of it.
No, it's beautiful. It's one of those patterns you can see right away in the graph.
Yeah.
And
Well, I mean,
yeah, the most recent one was the T+6 that happened. That's just coincided with the Bed Bath and Beyond, and those guys all ran that same week. And you can
because they're all in the same
they're all in the same
ETFs
basket.
together.
Yeah. So
Yep.
the one thing I keep Robinhood around for is I can move the graphs really easily and quickly just kind of see who has the same pattern going on, and I stacked them up. You got these 12 stocks all have the exact same run up after hours, the exact same time. It just happened to be the leader that time around was Bed Bath and Beyond that traded 30 million shares after hours or whatever it was. So, you know, it, I think you only need one big catalyst for that entire ETF to just go kablooey each time around. Yeah.
Well, it's not just one; it's
Yeah.
a bunch of
Yeah.
ETFs. It's XRT, it's IWM, and those ETFs use futures to hedge their NAV
Yeah.
to maintain their and that's probably the futures exposure that we're seeing on GameStop as well. See, the difference with all those other stocks in GameStop was, Melvin wasn't naked short 100% of the float going into it. And so that's why GameStop seems to, hold this higher price point and have these massive price increases, like $70 in August and $50 last Wednesday, just out of the blue. Whereas these other stocks kind of run like 10, $20 and then it goes back down. Well, and then, also the float isn't owned over there.
Yeah.
So our volatility is significantly greater.
Well, they also, since January, several of these new ETFs have popped up. They're probably shorting like crazy that are meme stock specific. You have that Jerkwad Portnoy created one. I can't remember the other one that got created, but they're basically creating these ETFs now that are supposed to follow the trends that happen on Wall Street Bets and other Reddit forums. And all it's doing is creating another basket for these funds to short.
Well, I mean, these ETFs essentially represents a infinite printer of shares.
Yeah.
As the authorized participants can make these baskets, they can curate them, and then they can use those shares to short the stock, creating 50,000 synthetics at a time, just one after another. But they are exposed on that because they do have to hedge those synthetic shares. And I think this cycle that we're approaching is likely the highest probability chance at a short squeeze, but I don't see that happening without people, like without options. You can't retail doesn't have leverage, and these guys have trillions of dollars.
We're
just
waiting for some whale to do it.
Well, we sit here and we wait for some whale, but the SEC has already told us that there is no whale. That what happened in January was us. So, leveraged retail is the largest hedge fund. There's no bigger hedge fund than us. And we proved that in January. And now we can prove it again, except this time we know what's going to happen. And I think that makes all the difference in the world. And so I've been talking about it as much as I can, discussing option strategies with people, what you can do if you're broke. What can you do if you don't want to take a lot of risk and you want a really safe options play? And there's an option for everyone, right? It's the beautiful thing about options. And maybe that's what Ryan Cohen was tweeting about when he was weighing his options. I'd like to think he was, but we do, and obviously, like, we can't collude. We're an open public forum. Everyone's going to make their own decisions, but I can present the evidence. And if people want to do something with that, there's an opportunity there. If you'd bought options on GameStop at any quad witching date in the last year, you would have made a significant amount of money, 10 times your premium, if not more. And this is also just good investment strategy. And like, as you know, this is my profession. And if you own a stock long, and you have no intention of selling, you should profit off of its price increases. And if you don't want to sell that stock, which obviously no one wants to do on GameStop, then you profit with options. And so this is no different than that, except, hedging retail options could create enough exposure on these funds that they do actually blow up their own positions. And you can't turn off the buy button on options that you bought 3 months in advance.
Yeah, because you have to give them the opportunity to get them and erase them if they want.
Exactly.
Yeah. Interesting.
So retail is MOASS. We are.
Yeah.
I mean that's what the SEC told us, and I thought it was very telling.
Yeah. So let's get speculative. We've got Loopring talking about their corporate partner plans to release their market sometime in Q4. We know that GameStop has one hell of an NFT division and blockchain division that's working on something. There's a speculation that, speculation is, as I am projecting, this is my crystal ball, is that they're going to do an NFT dividend of some kind, and the NFT dividend is going to, it might be the Wu-Tang album. I don't know. That'd be awesome if it was, but I think they're going to use that dividend as proof that people hold the shares who hold just piles of synthetic shares in their accounts. It's going to prove that the DTCC has been allowing just generations of naked shares like crazy, and that will be the excuse for GameStop to go to the DTCC and say, hey, we want to remove our shares from your system and move them to a different network entirely. That's my giant crystal ball. I think it's awesome if they do it type strategy. I'm wondering what you think. What would be your speculation as to what they will do with that?
I mean, I think GameStop is creating an NFT marketplace, something like Steam, using tokenized NFTs as a transaction tool. I think that falls more in line with what, like, best use case for an NFT. I don't think they're going to do a dividend. I gotta say, I'm first of all, there's nowhere for them to trade their stock if they don't trade it with the DTCC. Sure, they're going to create their own. I've heard everything at this point, right? Like I'm on Reddit too. I know what people's thoughts on the situation are. I think a lot of it's based on speculation.
Oh, definitely.
And it kind of seems like a big wish that everyone wants to come true, but I don't see it happening. I think it opens them up to a significant amount of legal liability. And yeah, I know Overstock has been doing well in their cases, but just because someone won their lawsuit doesn't mean that GameStop won't get sued, right? And I guarantee you that if they only release an NFT to like registered shareholders, that they're going to get sued, and they're going to get sued all over the fucking place. And I don't think Ryan Cohen would want to open himself up to that exposure. Not to mention, the DTCC doesn't give a fuck if you prove that there's naked shorts. They don't have any, like, it's not actionable.
Yeah, they never once had to follow a subpoena for any court case. They've been subpoenaed hundreds of times in these naked shorting cases, and every single time the DTC is like, yeah, we're not going to give you any of our data, and the courts are like, good enough for us. So
yeah, I mean, well, it's just they don't care. Like there seems to be this idea that if you prove that they've been naked shorting illegally, that's going to affect some sort of action, and I don't think that's the case at all. Like, who's going to do anything about it? Who's the DOJ? In 12 years? Awesome. Like, but where does that put us? Like, nobody fucking bought this stock to get an NFT of a Wu-Tang album. We bought the stock to make money.
Yeah.
Right. And like, as much as it would be cool if they, did all this crazy outlandish shit to squeeze the shorts, it's like probably not going to fucking happen, because Ryan Cohen bought a really valuable company for very little money. And he wants to turn it into a profitable company. And that's it. Like, I mean, if they're like, press from the last 9 months tells you anything, it's that they, don't want to fucking say a word.
Yeah.
Right. And doing something like that out of the blue, I think, is highly unlikely. I think if he's smart, he wouldn't do it. I think it's a bad play. The negative sentiment that would carry around would follow the company for years. And if he was buying in and like hostile takeover, pump and dump, and not trying to turn the company around, I could see him doing something like that. But I can't see it.
He's definitely long term for sure. Yeah.
Yeah, I can't see him doing that with a company that he wants to build.
That's take that into consideration for my own speculative. Yeah. I definitely think they're building an NFT network that
I
streaming and reselling of games for sure.
Yeah, absolutely. And I think that's going to be awesome. That's groundbreaking. Yeah. It could be revolutionary. They could get game developers on board with that. Yeah. Selling in-game items through their marketplace, and people are able to buy and sell, and they take a transaction fee. Imagine if every in-game video game transaction took place on their marketplace.
Yeah.
That's millions and millions of transactions a day.
Yeah, and
that might be more transactions than occur in the fucking stock market.
Yeah.
Right. And if they're taking just a nominal fee off of each of those exchanges, that's a lot of money for GameStop, and a unique idea. Yeah. Right. I mean, I don't know what the hell they're doing. Right. Yeah. They haven't told us, but I just want to squeeze the shorts.
Yeah. Oh.
So what else?
Well, man, okay, I haven't had a chance to look at the chat, which is just gone. There's about 9 million of them in here. So let's see if anyone has questions for Gherkin. Basically, so far, just a lot of people arguing about Adam Aaron and AMC back and forth. Here we go. Alan S. Could you ask Gherkin a few option strategies to take advantage of what he thinks will happen? Well, I think you're saying look for that February monthly, right?
That's not available to everyone, right? Yeah. Like we have to take into consideration that a lot of people can't just buy $2,000 contracts. Yeah. And so there are strategies. So I'm a trader, right? And what traders do is we take capital and we grow it. We grow the capital, right? Transaction by transaction, we increase that capital. And so we start off with a small amount of money and we turn it into a larger amount of money. And we just do that over and over and over again. And then eventually you become an investor. And you stop doing that because it's risky and hard and requires a lot of work. And it's once you have enough money, you can just put your money in things and it grows on its own. So we build capital and investors grow capital, right? I guess that's a better way of putting it. Yeah. And so I kind of did a short video clip on this called Options for Poors. But what I intend to do is since I expect the movement to occur on the 23rd and 24th of November, is I'm going to be buying into calls on the 19th, 22nd, and 23rd. And I'm going to buy weeklies because weeklies are cheap. Yeah. Everyone can buy weeklies. For the price of a share of GameStop, you get leverage of 100 shares, right? I expect IV and the price to continue to drop until that date. They're short volatility, so it'll drop very slowly. They don't want to spike IV, so they're not going to short it hard. And we have no upcoming price action occurring. So
that Monday, as you're saying,
that Friday the 19th is the first one. Then Monday,
but by the weeklies of that on that Monday or Tuesday.
They'll be 1126 calls is what I'll be buying.
Okay.
Right. And I will be buying them in ascending order. So I will buy one near the money contract.
Yep.
Like no more than $5 out. Then two slightly further out. Then 4, 8, as much as I can afford, 16, 32, 64. Further and further out of the money.
Yeah.
And weeklies, right?
Yeah.
And what this spread does is it allows me to sell these far out of the money calls at the peak and hold on to these closer to the money calls, which will be in the money at that point, until, I can kind of assess the price action throughout the rest of the week.
Yeah.
But basically, you'll be able to leverage a large amount of shares for a very small amount of capital. And if this run goes off like expected, then you've spent a very little amount of capital and you've 10 times it or 20 times it or even 30 times it, depending on how much we move on that date. I expect it'll be a pretty decent amount. We've had a lot of volatile price action the last couple of weeks. That's dying down now, but that put a lot of those quarterlies, those ETF quarterlies, in the money. And so I will be buying portions of that position each day to save money on theta as well. So I'll be buying some on the 19th, some on the 22nd, and then some on the
buy dates. Okay. All right.
Yeah. On the morning of the 23rd. In expectation for this movement on the 23rd and 24th. That also positions me in case they cover early. So by buying on the 19th, some, but not all, if they decide to cover pre-market Monday morning and begin covering early, because they can cover any time during that exposure window. They don't have to wait till the last second. It seems to be to their advantage to wait. Because they always wait till the last minute. And it probably is, right? More capital deployed elsewhere, making money during those days is better than deploying it on GameStop immediately. But that way I'm positioned in case they do try to manipulate that time frame. They can't manipulate it a lot, right? They only have a 3-day window. So they either have to run it on the 22nd, the 23rd, or the 24th, and it's likely it will be on the 24th. So, but that way I'm bought into all my options by the 23rd.
Yeah, that'll be the Wednesday, and we always get those weird runs on Wednesdays, don't we?
And then what I'm going to do is, if that does pan out and, the stock price goes up, how much, I don't know. Our upward volatility is insane because the stock is so illiquid. The bid-ask spread is so wide. I mean, last Wednesday, we went up $50 on 3.5 million volume. On the last ETF exposure date, we went up $70 on 10 million volume. And since that illiquidity is always increasing over time, which I'll show you in a second, as soon as we get into our talk about DRS, which I'm sure is going to happen. This run, if it's 10 million volume like the August run or more volume, presents significantly. We're also starting at a higher floor. We started the August run up at like 160. We're starting this one probably around 180. So there's a lot of factors that play in there, but we could see, and then we have a gap up at 280 to 300 that we could fill. So we could really see the stock take off. But if that pans out as expected and we see significant price improvement on that initial small amount of capital invested, I plan to take 50% of those profits and move them out into February options. And then I'm going to take the other 50% and move that forward to this date for the next ETF exposure. And then
that's December 19th, right?
That's December 22nd should be the exposure date. 19th is the expiration date. You are correct. And then if that also runs as expected, I will take 50% of those profits and move them out to February. And then the other 50% of my profits and move them. Oh, no, just 100%. 100% of my profits from that run
Mm.
out to February to wait for this last run
Yeah.
on January 25th.
Ah, excellent. I like
That's
being able to
a
climb
very
inside your
easy
mind
way
there.
to take
Yeah.
$500 and turn it into $5 million.
Yeah.
If all three of those dates run, that's
Yeah.
absolutely feasible.
I
You're
like
investing
those numbers.
like 500 into the first one, 5,000 into the second, 20, maybe 50,000,
Yeah.
depending on how much we run in December 22nd. You could have upwards of 50,000. If you 10x
Yeah.
December, then you can have $50,000 to put into February. If February 10x's,
Yeah. Well, here I got some more super chat questions popped in here, so I need to answer those for sure. This Deck P asks, if DLC exchange was set up in game content, would that not set up a battle like Apple versus Epic Games? Huh.
It could. I'm not
Yeah.
saying GameStop won't have competition.
Oh, they'll definitely have competition. Yeah.
Yeah. I mean, there's a lot of big players.
Oh yeah, and everyone wants a piece of it because it's a $200 billion industry. So if you can get your finger in any part of that pie, you're going to try and take it.
But first to market, right?
Yep. First to market. Cruel Kind just says happy 69th birthday. Wish my birthday every single time.
Oh yeah, happy birthday, by the way. I forgot.
Thank you. Yes. I am 1,000 years old now. The last hot shot asks, the only way to squeeze is through buying options? Question mark. Holding doesn't do anything. No, holding does a lot.
No, and so I will talk about that also.
That's to do with illiquidity. If we're holding,
yes, the holding is the other side of this.
Yeah.
And I created a very nice infographic for some of my viewers that I'll pop up here for you. I think everyone can enjoy this. Hold on. Where is it? There we go.
Now everyone's discussing how old I actually am. I'm 1,000 years old.
So we have this. So holding is the other half.
Yeah.
Right. Of this short hedge fund.
Eiffel Tower.
Yeah. And the beauty of what we can do with those, I didn't mention this, I forgot to. Those February options, say GameStop keeps running through the cycle up and up and up and up, and those February options are just exploded in value. Then what you can do to really drive the last nail in those market makers' coffin is you can exercise those options, forcing them to then go to market and buy shares that A, don't exist, and B, that they haven't properly hedged, as we know they're not properly hedging. And that really puts them in a terrible position. But all of this possible because we've taken all the shares off the market.
Yeah.
And I will kind of show you an example of that. I wrote a DD about this not long ago, but if we look at GameStop's price on the log scale here, that's the wrong direction, versus volume since January.
Yep.
Volume has moved directly inverse to price. GameStop up higher than ever before, volume lower than ever before. And this is buying and holding. Now, I'm sure we'll talk about DRS more. DRS kind of accelerates the slope of both of these lines. So if this is buying and holding on its own, then, DRS is just slightly more extreme.
Yeah.
So, DRS is a steeper angle, essentially. So DRS will cause the price to improve faster, and the volume to drop faster. But that's just a good example of actual data that shows the effect of buying and holding.
Yeah. Okay. Monty asks, can you just give it to us straight? Should we expect AMC and GME to squeeze before the end of the year? And how high is potential price? Well, I think what you're saying is that the squeeze is going to be basically a 2-month process. or in this case, it would be like with your options dates that you have lined up. And then, so I think, I think peak price in this case is looking at January then for like we did last year.
I think so.
Yeah.
Well, here on January 25th, we have ETF and GME Leap exposure. We have the final fail date for any FTD pileup that's occurred. And we have whatever open contracts there are on GameStop that need to be hedged. And on that date, specifically January 25th, the market makers, hedge funds, and ETFs are more exposed than they are on any other day of the year. They're exposed from every angle, derivatives, stock, you name it. So I think if MOASS is going to happen, that's the date that, that's the date that does it. In no uncertain terms, I have pretty good confidence in the theory.
Yeah. I'm picking up what you're laying down. It makes sense to me. Hope everybody out there, if you got more questions, ask me. And then Carl asked, how many Hawaiian shirts do I own? Or how many Hawaiian shirts do you own? I have, in general of my shirt collection, and this is day 3 of Shiny Shirt Week. You can see the shine on this shirt. I'm going the opposite direction of day 1, which was a shirt that's way too big for me. Now I'm on a shirt that's way too small. I have patterned shirts. The last time I did a census was like 780, but I've received more since then. So it's more than that. I haven't counted since then. So greater than 780. There are a few that are on the DL. Like the silk shirt I wore yesterday had 2 buttons pop off yesterday. So that one's on the DL for a while until I get it fixed. So it'll be out of rotation until I don't know, pay someone to do all these button sewing for me because I'm not doing it.
I have a quick question from over on my stream too. Yeah. Does the Feb run up fit into your thesis this year? Of course. February of last year ran on the ETF exposure date. I expect that after January's price action, if we don't MOASS, say we climb and hold a floor of 600 or 500 or above 350 ideally, and we run into that February exposure date with the price point that high and that many options in the money, I would expect that MOASS would then occur on that date.
All right.
But I think it'll happen before then. I think our price point's already high enough. I don't think Susquehanna, 0.72, Citadel, Melvin, I don't think they can sustain a price on GameStop above $1,000.
Oh, hell no.
They can sustain it up to $1,000.
Yeah, but they
have a lot of fucking money.
I don't know how to put this. Like, I oftentimes bring up the calculator to show people just what these numbers mean. A lot of these guys shorted GameStop in the $2 range, $2 to $3 for a long time and on a lot of shares, and it 100x'd since then. So their liabilities went and have been sitting up here forever. So they're trying to figure out any possible way every single day they can survive some sort of liquidity requirement or capital requirement for their margins. And we've seen ever since then, we see weird cryptos get pumped like crazy. We've seen strange things like a couple weeks ago when we were watching Berkshire Hathaway stock, a few shares trade.
Oh yeah, I think that was because NASDAQ raised their price limit also.
Yeah,
and then it just gapped up because there were open buy orders. That's a gap up. I expect that to happen during MOASS, by the way.
Oh, Monkey just farted really bad. I'm sorry. Holy cow, dog! The door is closed. Oh my gosh! Woo! Do you need to go outside? Oh, my teeth hurt on that one. Okay, sorry. Let's just reset my brain. All right. Fabian Garcia asks, "What is his opinion on?" Oh, they're asking your opinion on AMC. They'll be redundant. He's not a big AMC guy. I can hit the form right there.
That's a nice way of putting it.
Mr. Finch asked, "Do you think you'll wade into the options after hearing Gherk's theory? Why not? I mean, I like the whole reason we do this stuff is because we're risk takers and gamblers.
Well, the
Yeah,
beauty of just buying out in February or
yeah,
buying far dated calls on GameStop is they will print.
yeah,
If you buy them now, they'll print. The price will go up between
yeah,
now and whenever.
yeah,
So if you're buying just February's,
yeah,
historically, you're going to make a lot of money no matter what, whether you hold them or you don't. If you do hold them, you
yeah,
present a significant amount of pressure
yeah,
on the short hedge funds. So even though you generally don't diamond hand options, I feel like these February 18th calls, they push those dates out far enough that you can watch all the expected price action. And if it doesn't play out the way you want, you'll probably still sell at a profit.
yeah,
And at worst, you sell at a minimal loss, right?
yeah,
Like there are safe ways to play options. A lot of the reason people have this negative feeling about options with GameStop is they've been buying weeklies and getting burned as we float towards max pain at the end of
yeah,
every week. But the difference with this is that we're pointing out exactly when the price moves, how
yeah.
it moves. This is knowledge we didn't have back in last January. We didn't have this knowledge
Oh
back
yeah,
in
we couldn't see
March
any
or
patterns back then.
June.
Yeah,
But we do now. Enough of it is played out that we do now. And so, yeah, they could manipulate it. But if your options are far enough out, then it doesn't matter. You just sell them for about what you bought them for.
Oh, DJ BD wants to know the name of the indicator you used in TradingView.
Oh, it's it's actually called Gherkin Futures Cycle. Um, that's the name of it. It's by the Winter Dev, and I'm gonna add the ETF expiry dates into that with him when I get a chance.
Okay.
That way, the whole pattern is marked out on TradingView, and you can view it and plan options using an option strat calculator, or don't just hold. Because the people that can play options are the only ones that need to. You don't need to expose yourself to risk if you don't understand them or how they work. As always, I suggest that people stay away from options until they understand them.
Yeah, my advice with options is if you're going to do it, practice with really cheap ones.
Or paper trade.
Yeah, paper trade. Yeah, just do not go big your first time. It's because options can burn you, because if they expire out of the money and you don't sell, you have nothing. So you will lose everything you put into that. So
I think the biggest mistake new options traders make is they don't take their profits.
Yep.
If your options are extremely profitable and you have a few of them or just one of them, don't be afraid to capture those profits.
Yeah.
Worst case scenario, you can buy more of your favorite stock,
Yeah.
or, whatever else you buy.
I fall into that all the time, because I think, okay, this sucker's run, I think it's going a little bit more, and then poof. And I just I need to, my friend said, and I have this joke when there's a dice game called 10,000, and it's a blast. And sometimes you gamble and you go too high and you just lose the entire game because you just get greedy. And
it's like the gambler's fallacy.
Yeah,
right? I won once, I'll win again.
Exactly. And so I like to think of it as the Vanguard strategy. Slow and steady wins the race. They go up 8% year over year, every year. And in the end, everyone who has Vanguards is filthy rich. So that's, so when you're dealing with these options, if you get good profit, check out. And again, I still have moments where I cringe. Like I had $15 calls for AMC for June 15th. And they're up $1,000. I was like, dude, I'm out. And the next day they went to 7,000. I was like, oh man, but I made $1,200 or whatever it is. So I can't complain, but you might have those, oh, I missed it. But so rarely do any of us ever sell at the absolute peak, and you just have to accept that fact.
Yeah, no, that's true. It's hard. It's a skill refined over a long period of time. What I usually suggest people do is buy more contracts. That way, if you really want to chase that trend, you can sell some and just let the house money ride.
Yeah.
Right. The beauty of this is if it's true and everything plays out as I expect it to, by holding those February calls, they should be so far in the money by the time the end of January rolls around that you'll just be able to exercise those and turn those into shares of GameStop.
Yeah.
And that's probably
And that's just the knife that's going to go right in their back.
that really fucks them.
Yeah.
especially if they aren't hedging the delta.
Yeah.
If they're not hedging those options properly as they're running up, and they suddenly have to find millions of shares where none exist,
Yeah.
that's game over.
Yeah. Huh. No, you know, you're wrinkling my brain. You're tickling my amygdala there. Yeah, it's a beautiful way to look at it, because I am not at all in any way, shape, or form a technical analysis guy. So
I know.
yeah, I just think big picture on everything, and not the week to week, day to day.
And honestly, like the only thing I haven't even used technical analysis in the traditional sense on GameStop since June.
Yeah.
Everything I've been doing is more forensic technical analysis.
Yeah.
I'm looking for the market mechanics that we have no data on,
Yeah.
and how those are playing out over these cycles that we're seeing in GME. And I'm using the charts and the technical analysis because that's the only data we actually have.
Yeah.
It's the only place where we can find some semblance of truth.
Yeah.
And that volume and volatility and
you
the
can
price
see it
improvements and all of those things
right there on your screen is a regular pattern. Every on those dates, it's happening. Boom, 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 boom around those options days.
Even back here before January,
yeah,
it was happening.
Yeah, it's harder to see because it's so much tinier. But
it is. It's less pronounced.
Yeah.
But buying and holding didn't really take hold until March.
Yeah, I mean that's when I got in February, when it was like, I think the intraday bottom was $38, and I just happened to buy it then, which might have been my best luck ever. was like, okay, fine, I'll YOLO this $2,000 and pick up a bunch of shares. But yeah, and it's been holding ever since. Okay, Bird Bear asks me, what are you and Gherk's views on Loopring coin? We actually, before we came live, we kind of briefly chatted about that. I missed the boat. I had a couple people like, dude, buy Loopring coin. I didn't have any cash at the time, and I didn't. And now they're all just like bathing in money. Gherk, what do you got?
I mean, I bought 1,200 at 36 cents when I just saw a lot of people talking about it. I've traded crypto in the past, but my crypto expertise is minimal.
Yeah.
Like I know how to trade it. Crypto trades on sentiment. Technical analysis is super useful over there. I stopped doing it because I got tired of, waking up to take a piss at 3 a.m. and then trading crypto until 5 p.m. It's not healthy.
No, that 24-hour market will kill you.
Yeah. So I don't really trade crypto anymore. I own some. Yeah. I know what the ones I own do, but so I bought some Loopring. I'll probably hold it for however long until it's worthless, most likely. And then but I mean it seems cool. Some of their like layer 2 stuff seems really interesting.
I know.
Low gas fees, which is always a positive.
I like the most is the low gas fees in layer 2. And they I keep hearing for 8 months now, Ethereum 2.0 is gonna have low gas fees, and they keep
LRC is kind of a hedge against ETH2 never happening, right?
Yeah. And the gas fees are insane for Ethereum. It's absolutely just stupid. I complain about this all the time to my viewers. Like, you can't have an established future currency if buying a stick of gum is going to cost you $22 in gas fees. It's the people are not going to use that, especially when you can swipe a card and it'll be 2% or whatever. So you're not going to beat the credit card companies on that one until you figure out how to turn that mining into proof of stake, lower all those gas fees, and make it so it's accessible to people. I read an article about a guy who, he lost everything because he did a $120 transaction. It cost him $9,000 in gas fees because he did it the wrong time of day. So, it's absolutely silly what's happening there. Okay. Nick Callis asks, So is it getting impossible for hedge funds to short GME back down? Houston sees GME in the millions in the end. What's your opinion?
As soon as they've covered, the price is going to tank,
Yeah.
right? I know everyone wants to believe in an infinity pool, but I think if you want government interference with a short squeeze, that's probably how you get it.
Yeah.
If the price starts to affect global economic markets, and it starts to collapse the economy, they are absolutely going to interfere in every way available to them.
Yeah.
And so, yeah, it's going to like, just like any other short squeeze, it's going to peak. I think that peak, the ceiling could be astronomical if the short interest that we think is present on GameStop is in fact there. It absolutely could hit the millions of dollars. But as soon as they are done covering, it is going to come down.
That's kind of what
it's going to come down like a fucking rock.
Oh yeah, because
and nobody is going to be buying your shares on the way down.
No,
there's no buyer, right?
Exactly. And that's why I keep trying to tell people, and some of them get really mad at me when I try to explain that those trading computers, if we're looking at obliteration of hedge fund after hedge fund, and the DTCC computers and the computers from the banks and the prime brokers have to buy these shares, they're not going to buy any more than they need to have. So if they're managed to clear all those synthetics and there's just a whole bunch of people with physical shares holding, they're not going to buy your shares. They just aren't. And
there's also the fact that they don't need 100% of the float to clear the rest of the short interest at that point. So most of the upward price action is driven by clearing the synthetics. Once they've gotten 80% of the float, they're going to exchange that, right? Like they're going to also sell. Like once those lenders get their fucking shares back, they're absolutely going to sell their shares out onto the market. And then those are then going to get bought by the people that need them. And so
return to other lenders. Okay. Moon sorry, asked, can you ask him at what point to sell to sell calls?
Don't listen to that fucking degenerate. He's from my stream, and he's just going over to your stream to rile shit up. He just sells covered calls on GameStop all the time and spends half the time almost getting assigned. Just ignore him. Okay, move on.
All right,
next question.
Moon, we're ignoring you. Nick Callis asked another one. He's asking your speculative. What do you think the actual short interest is for both GME and AMC? Like how many synthetics do you think there are?
AMC
or both.
All right. Yeah. GME, I think there's a significant chunk of short interest still on the stock, probably hidden in derivatives and not being reported. Actually, all the evidence points to it being hidden derivatives and not being reported. But you can see if you go back, I wrote a guide on Reddit called Buy and Hodl. And you can check that out on my Reddit profile if you want to. It's over there. I don't know if you spend a lot of time on Reddit, but
I used to, and then in class teaching started again. I have not been.
Sorry, check out that DD. I think for anybody uncomfortable with GameStop or unsure, I think it presents a lot of at least circumstantial evidence to pointing out that this really isn't like the bullshit cult play that people outside of it might think it is. But you can see on the OBV for GameStop the amount of shorting that occurred from 2014 all the way up until Ryan Cohen's buy-in. When the OBV starts to climb above the zero line into the positive. And if you look at that as a volumetric comparison, we've traded about 10% of that volume this year. So there's a significant chunk of short interest there. AMC, I just maybe 14%. I don't know if there's any. I think AMC, and this goes into the volatility hedging. I think Citadel has switched their position. That was the run up that we saw in June. And they're using AMC as a volatility hedge against GME. So they go long volatility AMC, short volatility on GameStop. And then if GameStop runs, AMC will likely run also because of the split FOMO.
Yeah.
And so you'll see volatility spike on one, and then so they can cover their losses, right? They're hedge funds. They're always looking for a way to cover the loss on one position with another.
Exactly.
That's how you would do it on GameStop. That's how you hedge GameStop. Also, we know for a fact Citadel is long AMC.
Yep.
And that would be the only reason they would be long AMC.
Yeah. All right. DJ BD asks, would you mind getting Gherk's opinion on your GME sell strategy? Interested to hear his thoughts. So I don't know if you've heard my GME sell strategy.
I think you described it to me last time.
Yeah. So basically, I'm thinking I've got X number of shares. I'm not a huge holder because I'm not a rich guy. So I want to be able to sell one share at the price that if I were to sell all my shares would be retirement. For peak, we're assuming it gets into the stratosphere. And for me, that's $100,000. If I sell one share, $100,000, that's where I start my ladder. And then, in my brokerage, I can set a 50% limit beyond whatever the market trading price is. So I can just climb that ladder. And in 7 trades, I'm technically at over $1 million a share. In 14 trades, it'd be $20 million a share. I'm not saying I'll ever get to those prices or I'll be lucky enough to sell them at those prices, but it leaves that window open for me. And in the end, I can be, on the back end of that sell strategy, if I feel like that volume has gotten to that 80% point or gotten close to whatever the obscene amount of synthetics are out there, then I can perhaps dump everything before the collapse and get out. Who knows, it may be another little window and it goes up to 10 times whatever, but in the end, I'm not greedy. I made what I can make out of it, and I can sit on a beach. That's my strategy. Yeah.
I mean, it's not terrible. I'm not gonna. That's actually like I know you don't have a background in this, and so for someone who doesn't have a background in trading, which is what MOASS essentially amounts to, it's a trade at that point.
Yeah.
We go from this long-term buy and hold, and then all of a sudden we're thrust into this situation where we have to actually be like good at trading.
Yeah.
And for if you have no experience trading, and then I think that presents like a really good way of doing that. If you have triple X shares or XX shares and you're selling one at a time and you're waiting for these break points, like you're going to exit pretty equitably over that curve of the squeeze, right? Like, if you think of a squeeze as like a bell curve, you ideally want to exit as many times across the top as you can.
Yeah.
Right. And then, not exit here or here.
Yeah.
And so, I don't think that's terrible. I have my own exit strategy written, and kind of what it does is more of a trader's way of doing it, which is that, the price climbs and will consolidate at price points.
Yeah.
And by setting limit orders, under that price consolidation, if the price drops, your order fills, but if the price continues up, you still have your shares.
Yeah.
And then you can then take that stop and you can move it up higher and see if it fills here and the price goes up. Because this is generally how the peaks of squeezes play out, is you hit a peak and then the price comes down and then it starts to consolidate.
Yep.
And then it will either go up or down from that point. And so if it goes down, you sell a percentage of your shares. If it goes up, you follow it up.
Yep.
And you keep following it until ideally you sell as near the peak. And so what that kind of does is that kind of creates a scenario where, you have that bell curve and you're selling like here within this range. And so, but both strategies present a way to slowly exit your position over the course of the squeeze, which is the best way to do it.
Yeah.
Because the more exits you present yourself, the higher the likelihood that you exit at high prices through the majority of that position.
Yeah.
So and if anybody wants to see my exit DD, it's also pinned to my Reddit profile under Gherkin it.
Gherkin it. All right. Yeah. A lot of people they they're like, I'm going to hold this infinity pool forever, and like you.
That's how you end up a bag holder.
Yeah, that's what I keep trying to say. Like if you're holding and holding and holding and holding, and you are part of the 50 million float that holds and holds and holds, and they bought up all those synthetics, they're never going to need to buy your shares. And so
They'll need to buy some.
they'll need to buy some, but it's like,
But hold on. Like you gotta. I've done this shit for a long time.
Yeah.
Market psychology affects everyone.
Mm-hmm.
The idea. Like everyone's always like, oh, GameStop can't hit $10 million because 10 million times 62 million shares is, trillions and trillions. And like, that's more than the value of the global economy. Not every fucking person is holding at the peak of that squeeze. Yeah. Like I would be surprised if more than 10% of people holding currently are still holding at the peak.
Yeah.
Like this isn't gonna, like some people are gonna get extremely rich.
Yes.
Everyone's gonna make some good fucking money.
Yep.
Although if you'd asked me a year ago, I never would have said that the general public would go out in mass and buy a stock and hold it for an entire fucking year. Yeah. I mean, I'm talking to you right now, 3 months later, and if you look at VWAP, everyone's still holding.
Oh yeah.
And that's in and of itself a phenomena or a phenomenon. And like, I do expect people to hold far longer during this squeeze than they ever would normally. Yeah. But ultimately the people with 5X and 6X and 4X shares are going to realize massive amounts of money far earlier. Yeah. And I think they will actually hold the least amount of time into the squeeze.
Yeah, the people are going to look at zeros in their account and they're going to go, oh. So the psychology that happens.
I have a fat chunk of shares, and let me tell you, if the price hits like 50,000, I'm probably a billionaire.
Yeah.
At 100,000, holy shit! At $1 million, I'm richer than Bezos, and that's the same for like DFV has 10 times the position I do.
Yeah.
Like, I mean, you gotta think about like how that affects different people. Like nobody with that number of shares isn't selling a fucking thing.
Yeah.
Until the very peak. Right. Yeah. Just because like you're going to see $50 million in your bank account, you're going to sell something, right? Yeah. Like you're not going to let that opportunity slip you by. Exactly. So yeah, I don't think that that's going to be an issue.
Yeah. Oh man, I got so many questions in here from people. They're really happy now.
Go for it.
Can you go? Can you stay for a little while longer? Yeah. Okay. All right. I appreciate this so much. He's my first guest and my first success at having a guest on here, and I am so grateful because when I tried to have Rocky, I couldn't get any sound through. We had to do it on his channel, and so now I can invite him back. We proved it works. Chakuseki.
all of the.
Oh my gosh.
What did he say? I know him.
What flavors of popcorn will be sold at the AMC Mall kiosk, and does it include slug butter, Mayo Madness, heavy bag brickle, or rug pull raspberry?
He's a bit of a troll, but we like him.
Half the time people give me comments, I can't even read half of them. I'm like, I can't say they're going to pull my monetization, and I'm not going to be able to do the show anymore. Okay, Christopher Sajak. How does one feed this Gherkful options info to the monsters over at Wall Street Bets? Is the answer making a hype video and posting it as a meme?
I'm going to write a DD in the coming weeks on all of this, and try to compile it in a way that people can understand, and that's accessible. And if I'm not still banned from Wall Street Bets,
are you banned
I will
from there?
post it there. So when the flash crash happened in March, I was watching, I had live options data, and I was watching the options come in, and I saw millions of dollars in the money puts coming in. And so when they buy an in the money put, the market maker then has to short the stock to hedge. Right. And they wouldn't be buying those if they're covering. Right. So I knew they were done covering. That was the inflection point. And so I posted on Wall Street Bets, and immediately got banned for being a shill. And then I went to Matt Core's live stream at the time and super chatted him that the stock was going to crash. And one of his mods banned me. And so this is my spite stream to all those fucking people.
Oh, yeah, I got Wall Street Bets banned. So when I initially popped onto the scene was my giant Twitter thread that just kind of explained the mechanics behind the squeeze and what was happening. And I wrote this thing at 2:00 in the morning and posted the 50 tweets, and then woke up to like, I don't know, 50,000 likes, and I had 10,000 followers overnight. It was crazy. And someone was like, you should go put this in Wall Street Bets. I was like, all right, go over there. I had moderate karma on there and went to go post, and they're like, no, banned. And then
they were just banning everyone at that time. I think I'm probably unbanned now. But they are the exact fucking degenerates that we want to know about this.
Yeah,
absolutely. Everybody who fucking just loves options and loves leverage and likes to make a shitload of money.
Yeah.
It's not very often that you can predict the movement of a stock.
Yeah.
You know,
they're silly. All right, Johnny A. Houston acknowledged Gherk's channel as a cult.
No, it's not a cult. We have a song about that.
And do you like pineapple on pizza?
No.
Oh, I do. I love pineapple on everything.
Okay, this stream's over.
I went to school in Hawaii. My yard had 77 pineapple plants. I'd do something with them. I put them on steaks. I put them on everything. It's delicious. That was from Mike Nolan. Han Banan or Han Banan? Not really sure which way.
Han Banan.
Han Banan. Really appreciate you guys doing this. Oh, thank you so much. All right, and we go. Oh man, there's so many more. Holy shit! Think about when you scroll this thing. It just keeps going. All right. This is one of those questions. Grizz Murgatroyd. Would either of you be interested in offering one-on-one consultation for individuals who want more of a verbal tutoring opportunity? Some might not have time for reading. I don't know if I have necessarily time for that at the moment, and I think that starts to fall under the financial advisor.
It does. Yeah, if you want to learn more, I stream 7 hours a day, market open to market close. I try to answer everyone's question. I make sure that if anybody has questions about, nobody ever has to pay to ask me a question. I try to get to everyone if I can. Yeah. I'm in this. I've been in this since last November. The whole reason I did this was to inform you guys. So yeah, if anybody ever has a question about market mechanics or how these things work, I talk about it literally all day, every day on my stream. And for anybody watching my stream right now, make sure you guys head over to Houston's, give him a like and a subscribe, please. He's
and I also half my show is answering science and geography and geology questions. So, which we haven't done anything tonight. No, don't worry about it. We're not going to be going any Google Earth tonight because I have no idea how to switch back and forth and keep you on screen. So we're going to try that challenge. So yeah, sorry, Grizz. The day trading stuff during hours with Gherkin. But yeah, we're not financial advisors, so the one-on-one thing I think can get me in trouble. So I'm going to say no.
I'm not a financial advisor either. Yeah. I'm not giving anybody one-on-one advice. But if you do have a question, I'll answer it.
And I if you ask me a question about what's going on in the news or whatever, you could always send me a DM on Twitter. I literally answer everybody. Even the people who are mean, I'll be like, fuck you. So I'll answer you. I don't feel comfortable saying I would do that. Plus, I don't want to go through all the certification to do those things. I have a bunch of students I got to keep teaching also.
You don't want the liability.
Exactly. Oh, yeah. Houston, can you chug a bottle of wine for us pigeon whales? No, because I'm a square. I could chug a bottle of Martinelli's apple cider. Oh, beer.
It's okay. I haven't done it for them either.
Yeah. And Cameron Mirza, what's going on with Evergrande? They went bankrupt. They're defaulted.
Who cares?
Yeah, who gives it? China's going down, man.
Is
There's
it?
yeah.
There's a beauty in being able to do whatever the fuck you want in your own financial market whenever you
Exactly.
want to do it with zero regulations stopping you.
Yeah.
And the CCP has that.
They
So
do. They set the
um,
value of their currency. They peg it to the U.S. dollar, and it's
mhm.
not a fiat currency. It is pegged. Um, and the problem is that it's our problem because they're going to default on probably hundreds of billions or trillions of dollars in bonds of money they owe people outside of China.
I heard today that they paid a bunch of the 150 million that they were
Yeah,
defaulting
well,
on.
they sold their G6 aircrafts, that whole fleet of G6s, and they sold them all to pay
Okay,
this round.
good.
So
Yeah,
they're
liquidate them.
yeah they're liquidating. Um, Dan Yeat, oh, they got one of the Dans is here. Dan Yeat from Brooklyn Deli. Please ask Gherk if we can yeet some car batteries into the ocean to recharge the eels.
I've tried explaining to them that electric eels don't live in salt water
They
and
don't.
they also don't need recharged, but
They do wear themselves out. That was proven by Alexander Humboldt when he did his trek across northern part of South America, and they wanted to capture eels, but they didn't know how. So they took all their horses and threw them into the pond where all the eels were. Until the horses got electrocuted so much, almost all of them died. But the eels wore themselves out, and they're finally able to capture some for steady. So
yeah.
yeah,
Yeah. I mean, they only have so many like discharges at a time, but I think
exactly.
I think they recoup that energy.
They do. They
Yeah.
got to go eat some dead horses, and then they can recoup
We
it.
don't need to throw car batteries in the oceans, guys. It's
Yeah,
okay.
it's okay. Nick Callis is like my best customer here. Nick Callis asks, "What will MOASS do to the price of other stocks?" So he's asking about the counterbalance. 25%
Well,
drop, 30% drop, more.
you'd expect that if MOASS occurs to the magnitude that we expect, there will be sell-offs of large positions in order to provide enough liquidity to cover
Yeah,
the short squeeze. And there's fear, sell-offs beget fear, and that begets more fear,
yep,
which causes larger and larger sell-offs. So while I don't want a market crash to occur before MOASS, um, I would like one to be happening because of MOASS.
yeah.
I wouldn't mind buying up 20% of Amazon on the cheap.
Oh, that's exactly like I would. I want to load up on blue chips, baby. Like they're all
Can
gonna
you
be
play the
so
Not a
depressed.
Cult
Yeah.
song? Oh, do you mind if I play?
Let's do it. All right.
My, they're all just
Because my side, I
they're
never heard it, so
okay.
yeah.
So I'll give you the full thing then. It's just like a song I play, but it's silly when members come on.
Oh. Oh, where is it? Is it going? Or is it just not visible, not audible on my side?
That's enough.
Oh, I don't know if it popped through on my side or not. So I think your side of the stream got it.
Oh, okay. Yeah, it might not,
All right.
but they're all very happy.
Okay.
It didn't play. You
No, it
heard
didn't
it.
play on my side at all. No.
Oh, okay. Never mind.
We can just imagine what it is. Mr. Finch thanks us both for doing this. He loves us. Thank you very much, Mr. Finch. Sorry, they just reset. Ham Banan liked and subbed. Thank you so much, Ham Banan. Trash Dan, thank you, Trash Dan. And Dan Rod, Chalice of VWAP. What are your thoughts on air fryers? my general thoughts on cooking food is I don't do it unless I'm cooking for more than just myself. I'm a microwave burrito, ramen noodle, takeout kind of person. Uh, I see my time as an investment as well, and if it takes me a half an hour to make a 10-minute meal, that's a terrible use of my time. So uh, I will gladly cook for if there's more people than just me to feed. But if it's just me, you're lucky to get me to boil stuff or push buttons on a microwave. Um, I eat garbage, and that's my vice. I'm a square otherwise, but I will gladly eat microwave frozen garbage all day long. So yeah, so air fryers, don't touch them. I had a roommate that swore by them. She loves the things. More power to her, but she also liked cooking. So, you know, she's one of those. Visceral Records Live. Houston, what is more feasible, a pigeon-sized whale or a whale-sized pigeon?
You're going to get a lot of these pigeon whale questions.
More feasible, I think, would be a pigeon-sized whale, largely because even a hollow bone structure, you're going to have a hard time getting the muscles and tendons to be able to be strong enough to keep that beast alive or afloat. And you might get a ground walking pigeon, which is basically what a dodo was. A dodo was a pigeon that landed on Mauritius, had no predators, was like, I'm going to become fat and happy. No reason to fly around because no one's going to eat me. And those are pigeons. They were very large pigeons that were very dumb. Daniel Rock, please let Gherk know that Thunderstorm, Dan Power, Thunderstorm is strong tonight. The Dans have made it. Chicken Tender Daddy, thanks for doing this, guys. Has made my evening and work so much more entertaining. Well, thank you so much. I appreciate everybody jumping in, especially jumping in with super chats. They're always super appreciated. Oh my God, the chat is so long. I can't even focus on these things. My goodness, there's so many in here. Somebody had a really good question, and I blew past it because so many super chats popped up all at once, and I wanted to ask it to you, and now I can't find it. And of course, I can't scroll up high enough to find it anymore. Gosh, dang it. That always happens. Wait, oh, forgot I've got two sides going. Can I get... No, that will not... Oh, you son of a bitch. Okay. Dan Yeat from Brooklyn Deli also asks, how do you feel about the lead singer of Red Hot Chili Peppers? Meh. Anthony Kiedis is a terrible frontman. I'm going to say that.
He's also crazy as fuck.
Oh, yeah.
I met him.
Yeah.
He's awful.
Yeah. They had some songs back in the day that were pretty good. I don't think they've had a good song in 20 years. Their music for ladies who are freshly divorced, driving around in a Volkswagen Cabriolet, trying to prove they still got it. That's their demographic. So that's what I'll leave it. It's my Anthony Kiedis.
Everyone was cool once upon a time.
Oh yeah, I mean I was cool. I was so cool once, man. I had it all going on.
I still am.
I now wear shirts that are either too small or too large. That's you can't find that cool at all. Someone had an awesome question and I cannot find it here, and it's trying out the wall because the stupid chat. Where's Freg from Optimus Grimy? I have no idea what that means, but does no one know what Freg is?
Freg was abducted. We haven't seen him in quite some time.
Okay.
He is missed. He was a good friend.
Yeah. All right. Cool.
Yep.
Daniel Rock says, let Gherk know Wendy's was a great play for me. I mean, all your users are in here just trolling the shit out of me right now.
Yep.
A user.
Welcome to my life.
How do you feel about Lara bars?
I shorted them. I got my money back, and that was all.
All right. There you go. Boom.
Yeah, I ate a Lara bar on stream one time. I really, really hated it. So I bought puts on General Mills. Yeah. Those puts went in the money. I received a refund.
Yeah, every once in a while, I call it trading like a third grader is the way to go. So I can't remember which class it was. It was this third grade class in like rural Kansas, and they entered this trading competition with all these finance and business schools from across the country, and they had one school year to do as many trades as possibly good, and whoever made the most money in the end won some scholarship. And these third graders just kicked the shit out of the finance guys, absolutely destroyed them, because what they did was they're like, ooh, the Tickle Me Elmo doll is really popular, I should invest in Hasbro. Oh, I really like the Under Armour shoes, I'm going to get Under Armour stock. And they followed every single solitary fad that third graders liked throughout the entire year, and they were up like hundreds and hundreds of percent at the end of the year based on all the business schools. So back when I did day trading with crappy penny stocks, 2009, somewhere in there, so there's all these bankrupt companies that would just bounce around a lot, and you can make 100% on your money on a day trading those things.
No, you absolutely can.
And I was dealing with penny stocks, and there was Mad Cats Interactive, which makes like headphones and gaming keyboards and stuff, and they had gotten some sort of deal where they're going to produce the official Mad Cats Interactive Call of Duty Black Ops headphones. I was like, they're $1, I'll buy them. And it went up to like $2. And I was like, you know what? I need new headphones. I'll buy some Mad Cats. And these headphones came, and they're the biggest pieces of garbage I ever had in my entire life. I sold all the stock, and like the next week it just collapsed because everybody got their Call of Duty headphones and they all sucked.
Yeah.
So, if you trade like a third grader, sometimes you can make some good cash on that.
No, I mean, yeah, I always tell people the financial markets are a mathematical system ruled by emotion.
Yeah. It's true. I mean, just look at Tesla.
Yeah.
It's a company. It's not even the top 40 of car manufacturers.
Oh, don't get me. I fucking hate Elon Musk.
Oh, me too. That's something we might not agree on pineapple, but we can agree that Elon Musk is just
the worst.
If I want to piss people off on Twitter and just get in fights, I tweet, if Elon Musk was born poor, you never would have heard of him. And then the fanboys just want to come for
That's
him.
true of most rich people.
Yeah, that's true. Hacksaw, can you ask Gherk when we're supposed to meet at Wendy's? Thanks for all the info tonight. Good stuff. So when are you supposed to meet at Wendy's?
Probably in about 14 minutes.
14 minutes. All right. That's it. It's his cue is saying we're going to be down here in 14 minutes. So Dan Michael Vincent, that's a good name right there. Just hopped on the stream. Don't know if we have made fun of who win yet. No, we did. How do you feel about cover calls on GME?
Very risky.
Yeah, very risky.
Yeah. Too much upside potential, and the idea that any catalyst could come along and trigger that presents a great deal of risk for covered calls. I saw cash secured puts.
Yep.
I don't know about you. I don't know how you feel about that.
Yeah. I generally deal with out of the money calls and hope for the best, because at some point there's enough volatility and they rocket enough, I'm like, I'm out, and that's what I deal with. Mr. Finch also asks, what's the best trade you made so far? Probably years ago when Washington Mutual had gone bankrupt. So again, I was day trading these bankrupt pink sheet stocks, and every day Washington Mutual go from 1 cent to 2 cent, 1 cent to 2 cent, 1 cent to 2 cent. So I buy at 1, sell at 2, buy at 1, sell at 2, buy at 1, sell at 2. And then one day I'd bought at 1. A newspaper article came out in the Seattle Times saying there's a favorable court ruling for all these folks that have been screwed by the FDIC and Chase Bank. So you guys don't know, Washington Mutual was the largest saving loan in the world, and they got seized by the FDIC because they had so much liability in these volatile mortgages. And Chase Bank paid basically $1 billion to get $300 billion in assets and assume the role of Washington Mutual Bank. So all these shareholders were left, their stock went from like $140 to 1 cent overnight. And, but there's, it would just bounce. So I was hoping that there'd be some favorable ruling. So this ruling came out saying that Chase Bank may have to owe shareholders money. And the stock went from 1 cent to 50 cents, and I sold, and then I went to Europe for like 6 weeks. Fairly luxuriously, I went to Europe for 6 weeks on that I was 29, 28 at the time, and had a really great time. That was probably my single best, and it was purely accidental. I was just there making 100%, on a 24 hours worth of trade with those things. Um, and that was probably my single best. And I just tripped and fell into it. I had no intention, no clue that it was ever going to be that much. But at the same time, I was doing the same thing with Nortel networks, and then all of a sudden, because trading, you had we all played nominal commissions back then. So like $5 a trade, $14 a trade, whatever it was. I think it was 14. I was with USAA, and I had Nortel networks, and all of a sudden the price went from 1 cent to like 1/10,000th, and it was going to cost me $14 to sell like $1 worth of stock. So I just left it in there, and I got a check last year when USAA sold their brokerage to Schwab for like $4. Like, we just got rid of your your Nortel stock that's been still bouncing around. That was the worst trade I ever made right there. Yeah. Okay. They're asking me to chug a bottle of wine again.
Yep.
Nope.
They do that a lot on my Discord.
Yeah.
I don't know why.
It's like the birthday thing. They get one little idea in their head and they just hammer it.
They like their things.
They do.
Yeah, for some reason I started a financial entertainment channel and it's become overtly sexualized. I don't know how or why, but it is. And I'm okay with it. I like to get weird, but it's definitely odd. It's an odd social experiment.
Yeah. All right, we've got Trash Dan in here trying to get me to talk about AMC. Trash Dan asks, how would you explain the AMC thesis to someone who's skeptical of it, especially after Adam Aaron offloading a bunch of his stock? Why are you so bullish? I wouldn't say I'm bullish in that it's going to do what GME does. There was a time last summer in beginning of June where I was like, this actually might be more than I thought it was. And then Adam Aaron and company dumped 11 million shares onto a bunch of short hedge funds and in the dark pools, and I was like, So I think there's a potential for it to pop, but it's never going to pop to the levels that GameStop will. GameStop is the biggest play here, and there's going to be hundreds of other stocks that follow this because these short hedge funds, like we were talking about before, there's a bunch of baskets for these things, and there's a whole bunch of OTC stocks. We might not have a clue what they've shorted and how much they are, but when these hedge funds get vaporized and their assets under management get sold out from under them, they're going to buy pretty much everything that's in that margin that they created. And so we see right now with Credit Suisse, they're still sitting on like $2 billion in liability left over from Archegos because they can't sell this stuff and make any money at it, or they can't buy it up and without basically getting rid of all the cash they have on hand in their bank. So this is going to pose a big problem for these banks and primary brokers and the Fed, because the Fed can't let these guys go bankrupt, because if we vaporize liquidity across the market, then no one has consumer cash. Businesses can't make payroll. We're going to have homes won't sell, cars won't sell, credit cards will disappear. Like, they can't let these guys go bankrupt in that way. So the Fed and the Treasury are going to have to respond in ways that are drastic and astronomical, I think. So, yeah.
Likely.
Yeah. So, but there's going to be tons of OTC stocks, tons.
I mean, everyone's always so worried about like hyperinflation and stuff like that. But like this event shouldn't create any money. The money should already be there.
Yeah.
It should simply a transfer of wealth.
Yeah.
And the people that were once rich won't be anymore. It'll be fine.
Yeah.
Don't worry about it.
Ham Banan says, odd and fun. Love the Gherk. Bird Bear, can you two discuss DRS? I don't know if we'll be too different on this one. If you want a DRS, more power to you. To me, it just seems kind of a pain in the ass, and so I'm not DRSing. And that's my opinion on DRS. Yeah,
that's fair.
Yeah.
I think DRS presents a fundamental cause of a short squeeze. I think over time, with enough of the float registered, it presents a serious threat to those short on the stock. I don't disagree with that. I don't like the pressure put on people to do it. I'm against a lot of the misinformation that's being used to sell it to people. I don't like that. I got into this because I was fed up with the misinformation going around on GameStop at the time, and that was before this. So it goes very against like why I do this and what I believe in when people do that. I do think that there is a true factual thesis for DRS. I think it does have an effect. I think that effect is minimal on the baseline currently of FTDs, but I think when we see those FTD spikes, it acts as a multiplier. When they're looking for shares, those shares are unavailable, and it definitely presents a threat to them. I think as more and more of the float gets registered, we'll see that threat increase, but I think it's more of a like we will reach an inflection point with registration that will cause a share recall. But I think the idea of getting a guaranteed 100% of GME holders to do it is unlikely. And I don't do it because I'm a trader. And the idea of trying to trade out of a transfer agent sounds ridiculous to me. And
that's one of the arguments I make as well.
If GameStop hits 10 or 20 or 50 million a share, there is absolutely no way in fuck I'm holding a single one of those shares through that moment. I'll buy back in at the bottom.
Exactly.
I'll buy myself onto the board, but I'm not fucking holding any shares through the squeeze, through that kind of squeeze. Like if those prices are realized, I'm absolutely going to sell everything I own. Right, because it like people say it now, but when you leave $500 million on the table, you're definitely going to have a different feeling about it.
That's kind of that's the exact argument I've made, is that there's weird rules to selling through a transfer agent, and even in the Ask Me Anything that popped up with the president of ComputerShare, he's like, yes, you can sell a share for $1 million, and then subtext, but we won't execute it if it's over 250,000. So there are issues with doing that. So if you have no plan on selling, by all means, bag hold through that. And
I don't want to call it bag holding. I mean, it is a sacrifice, right?
It is a sacrifice, yes.
And I understand that. And if I have evidence in the data of that baseline FTD increasing, I'll register some shares. I don't give a shit. I have plenty. Because I'll do my part to help this along, right? Or if DFV comes out tomorrow and tweets his whole fucking position in ComputerShare, I'll register some shares. But until I have evidence, I'm not doing shit with my money unless I have proof. Like I didn't get into GameStop because I thought it was a speculative play. I thought it had real potential value. Right. And if I think DRS has real potential value, then I will put shares in DRS. But otherwise,
fair enough.
Mr. But I don't want to call them bag holders. No, I think there's a lot of misinformation though. I think there's like a lot of things flying around about like your brokers are going to blow up. If your $1 trillion brokerage blows up, let me tell you, the shares that you have will be worthless because there won't be an economy to sell them. Right? Like I mean, or you're going to be the only one to get an NFT. Well, then every GameStop holder that doesn't get an NFT because they weren't registered is going, like every institution who isn't registered, every shareholder that isn't registered is going to sue GameStop and to the point where the mounting legal fees would put them out of business. Like there's just like there's a lot of lies, and I don't like the idea of lying to people to get them on board with a thesis. Like I'm presenting a thesis, I'm presenting the facts as I see them. If you like it, sure. If you don't agree with it, don't agree with it. It's not for you. That's fine. But I'm not going to like push anybody like you need to buy options to trigger this. Like I'm not going to do that. And I don't like the idea that like the people that are about, and I've talked to the people that wrote all the DRS DDs. And I'm fully in agreement with anybody that wants to do that. That's your shares. Do whatever the fuck you want with them. Right. But don't tell me what to do with mine. right?
And
And
I bought this specifically to sell during a squeeze. That's
yeah,
why I own these
same.
shares. And I do think the long term fundamentals of GameStop are there. And I do think, this was a company that made $6 billion in sales that May of last year you could have bought the entire company for $200 million. That's bonkers.
And
That's you know so
there's
now it's
another thing
finally
with that.
reflecting
If
the actual share
Fidelity
price. Yeah.
is found to be lending my shares, even though they have a fiduciary obligation written
Yep.
in their legal paperwork to not sell my shares in my cash account
Yep.
or lend my shares,
Yeah.
and they are, I'll sue Fidelity.
Yeah.
They've got plenty of money,
Yeah.
you know? So it's fine.
Yeah. Go either way.
Yeah.
Mr. Finch asks, "Do I like hot pockets?" I don't know if I've ever actually had a hot pocket.
I had one today. It was not as good as I remember them.
Are those like little pizza wrap roll things?
Sort of, but bigger.
Bigger? Okay. I don't know if I've ever had one before. Like mini
How have you
calzones,
not
I
had a
guess.
hot pocket?
I
Go
don't
out and
know.
buy a hot pocket.
I,
Get
I,
a pepperoni croissant
okay.
pocket, bake it in your oven. Don't use your microwave.
All right.
You need to, and then experience that. Don't burn the roof of your mouth.
I
They
did
are
that
like hot
last
lava
night on
inside.
microwave burritos. It's
Oh,
been
okay.
peeling all
Yeah,
day. So
those will do it.
yeah. So I will have to experience that. It's something my mom never bought when I was a kid, so I don't know if I've ever had it. Yeah. DEA got that dope. I have a lot of metamaterial. Do you think it is going to pop before GME does? Well, the metamaterial play has to do with the fact that they merged with another company that was shorted like crazy. And then they turned that company basically into a preferred dividend share. And we have no idea what that's going to be before January 1st. Basically, 11:59 on the 31st, we find out if it's going to be a cash dividend because they sold off a bunch of oil fields, or they're spinning it into an oil company and you get all these new shares. And so,
That's interesting.
yeah, we're just kind of sitting here waiting. And George popped on when the stock price went to $21. Went from 87 cents to $21 in like 2 months. He said, he's like, yeah, they shorted Torchlight by way too much, and they haven't covered. And that's kind of where we've been sitting, is that a lot of those preferred shares you have in your account are actually synthetic. And so we're just waiting to find out what that dividend's going to be and what that means. So maybe we may get some sort of 3-month play like Overstock when that dividend comes out. I don't know if you've ever talked about metamaterials at all, but that's
Not really.
Yeah.
Generally, if I think something's being pumped and dumped by Wall Street bets, I'll stay away from it.
Yeah.
Unless I'm in it first, and then
Yeah. Well,
they're
yeah,
pumping my position, right?
I know people who are engineers there, and the price was I bought it 87 cents, and I was like,
Oh,
okay,
okay.
so I'm cool.
Yeah.
Yeah, and I
It's
bought
easy to hold when you're up.
exactly. Yeah, and then I bought a bunch of Torchlight too because the word was when they did this merger, I think it was finalized around Christmas last year, or the structure of it was finalized around Christmas last year.
Yeah.
They were like, hey, we're going to sell off all of our oil assets and we're going to pay that in a dividend. And I was like, oh, sweet. I can buy this stock for a few cents and get $1 dividend or more. And then the oil prices started skyrocketing, and what was unprofitable oil fields for them a year ago would now make like $30 in profit per barrel. And so the value of that oil field went from like pennies to billions. And so that's
Interesting.
it might be a luck of the draw on that one also. And if they're hundreds of millions of dollars short on their or 100 millions of shorts on that Torchlight play, that dividend could cost hedge funds 10-20 billion dollars. So
I like it.
those payment and lose, they add up if you are really short and there's a special dividend that's huge.
Just a quick question from my chat.
Yeah.
I will be doing a stream with Trade Spotting this weekend.
Oh, right on. Say hello to Jamie for me.
Will do.
Yeah.
Yeah, I'm gonna go over the thesis similarly with him as well.
Right on.
As I do really believe that this moment presents the best opportunity for MOASS.
Yep.
I mean, I'm kind of just highlighting it here, but that looks like it.
All right.
I've never been more sure.
Yeah.
Whatever that means,
Yeah.
right? But
at least the options play alone, you know, even if it does, you don't 50 exit or whatever after the 3 trades, there's still a good chance you'll have something in your pocket.
yeah,
Yeah.
which, you know, after holding a fucking year, I think we all deserve.
Yeah.
Right?
Why not? Why not? Lou Sadu, yeah, he says, Houston, literally, you've been saying AMC to 10K. I've said AMC can probably peak around that range, but the current action of the board is really putting that stuff to the test. You know, I have been warning that the board is not in it for you. They're not in it for the investor at all. And, you know, they didn't use the millions of shares they sold to pay off debt and to get the fundamentals of that company going. They're still losing a lot per share. You know, the fundamentals are way more behind GME right now than it is behind AMC. And you know, seeing the wishy-washiness of the board really doesn't.
I understand why people are in AMC.
Yeah.
It was cheap. I get it. There's always a cheaper play that rides the coattails of the bigger play. You don't make money if the number 2 horse finishes number 2.
Yeah.
Right?
Yeah. Yeah, I'm losing that fire in the last week with AMC. I'm going to be honest.
If you're, I mean, yeah, especially with Adam Aaron pulling that, that's the final straw to me. I've ranted for months about not liking AMC. I ranted about it before it ran to 70. I ranted about it after. My bearish stance on AMC couldn't be more apparent to anybody who watches me. But when your CEO is telling you to diamond hand while he fucking profits.
Yeah.
Come on, man.
Yeah.
Well, he's selling. So of all the people that should be fucking holding, he's selling. Like, you can't, that's bullshit.
Yeah. He's already worth a filthy rich amount of money. Like, I got a plan for my retirement. Okay, so you sold $53 million in
what
stock.
Fucking island does he need to buy to hold his fat body?
Yeah, I mean, selling his position in the Philadelphia 76ers should have been enough for him to retire on. But, so, you know.
Well, he really wanted to make sure Stephen Cohen could get that sports team, right?
Exactly, yeah. Do it yourself, lawn domination. Whoa. Thoughts on Kenny video denouncing the GME fiasco? Is there a Kenny video that I didn't see that just came out?
Yes, you did some interview today. I haven't seen it yet.
I've not seen it, so I can't give an opinion on it. But my guess is like, yeah, he's Kenny G. He's a sociopath, and he's gonna try to blame everybody else for his own problems, and that's the way I see it.
He's got some insecurity issues.
Oh, definitely. Yeah.
Do not underestimate him.
Oh, no.
He is absolutely one of the smartest individuals on Wall Street. We were starting to dig into this ETF shit, and Citadel is recused from reg show reporting in almost every part of the market they operate in. And he did this shit.
Yeah.
He did this shit 13 years ago. He has been planning all of this forever, waiting for the after effects of 2008 to be felt. And he has positioned himself in a way where he doesn't have to report a single one of his fucking positions to anybody, not the self-regulatory agencies, not the SEC.
Yep.
He is a phantom in the markets, and he is wealthy and powerful, and he will do anything in that scope of power to make sure that this doesn't fucking happen and his hedge fund doesn't get blown up.
He's got superpowers that we will never have.
But we have leverage.
It's true. And the thing that warmed my heart the most was, think it was the second or third hearing with Congress back in March. And you had all these folks from other market makers and funds and institutions, and every single one of them were like, hey, if Citadel blows up tomorrow, we can take over their role.
Oh yeah, they all fucking hate him.
They all, every last one of
But
those
there's a
guys
reason
wanna
he's
see
still
him
in
die.
business, even though he's screwed over everybody on the way up.
Yeah.
Dan Michael Vincent, do you think AA wore pants on that last earnings call? I don't know. Was Trey Trades there? It depends.
That was, showing hog on the on the
dropping hog at the shareholders meeting.
Oh goodness. All right. I think that will do it for us, man.
Yeah.
Thank you so much. I'm so grateful that
absolutely. Dude, congratulations on your 69th episode, man. It's been a journey. Me and you did this a few months ago. I've been moving and stuff, so I haven't been collaborating with anybody, but it's super awesome to get together. And I think it's good for me to get to explain this to a person in person. I talked to the chat about it, but it's kind of almost just like going over it and over it and over it in my own head, right? Because it's not like a call and response. Oh, Barto, dude, thank you so much, man.
But then it becomes like all of a sudden you guys start using your inside lingo, and then people outside of it are like, "Oh, what's going on?"
I know it's hard to draw new people in because of that. And I understand it's a weird place to get used to over on my stream, but the people that do, it's cool, and I like it. I don't. If other people don't like me, I don't care. But I do want to say that I cannot emphasize the importance of this enough. If you guys have any questions, even if you don't like me or don't want to watch me, feel free to ask them. This is, in my mind, the best, most factually backed thesis we've had on GameStop so far since DFV. And I don't say that lightly. I understand the damage this could cause to me if everyone got burned, but I think the opportunity is there, and I think if we don't seize it, well, then we don't.
Then we're right back where we were, just twiddling thumbs and waiting.
I think we'd be waiting quite a long while.
Yeah. Well,
because I mean, if they can drag it out past this point, there's really not another point of exposure this great. That will occur in the next year, not until next January. And who knows how they could deleverage themselves between now and then. Time is not our friend, right? And if this is the opportunity, and we understand it in the ways we think we do, then you would be doing yourself a disservice to not learn about it or participate in some way.
What's the name of your channel again? It's Pickle Financial, right?
Pi-Fi. Yeah. Like Wi-Fi, but with a P.
Yeah, Pi-Fi. So, because someone just asked what the link was, so it's Pi-Fi. Yeah, with the Gherkinator. It's every day something weird happens, makes us all go, huh? And I just like being able to do these shows with you, or even with the chat, because I don't have eyes everywhere, and it's such a great place to consolidate information,
knowledge.
And people see things that I've missed during the day because I might be in class or whatever, or arguing with somebody on the internet, because that's my favorite thing to do in the entire world. But it's I don't know, coming out of this whole COVID social distancing thing, I love being able to meet people and do this stuff.
It's been super awesome. Thanks for having me on.
Man. My pleasure.
I appreciate it. Guys, if you haven't gotten a chance, and you could, whoever's watching my stream, make sure you go give Houston a like and a subscribe. He's definitely a knowledgeable guy. And it's always a pleasure to talk to you, man. I really appreciate you having me on. All right. Have a good night, man. Thank you so much. You too. Okay, everybody else in the chat there. Let's have a good night, guys. I'm going to put on the intro for the outro. I'm going to say goodbye to everybody. All right. Have a good night.